Brett Horowitz, viewer out there, welcome to 2023 and welcome to the predictions episode. We've keyed in on some people asking us all these questions, and we've decided to do a quick little predictions episode. Today we will deliver on that promise.
Yeah, it's every client not every client, but a lot of clients over the year will ask us, what do we think about X or Y during 2023? So we're going to put our money where our mouth is and see how we do.
Yeah, you can hold us to it. So what Brett and I have decided to do, we've listed out 9 areas of general importance that we'll predict. One of them is something we've already done, dogs of the Dow. Things like recession and the 10-year Treasury and the S&P 500 are also on the list. So today's plan is to walk through all those predictions and see where we end up a year from now.
And the most important thing is why, right? I mean, we can get the prediction right, but if we get the why wrong, maybe get a half point for that.
No, dude, you can be wrong and still be brilliant, and you can be right and still be stupid.
Or we call it lucky. Okay.
Exactly. All right, so let's kick things off.
Excited to start 2023, Marcos, because I have to make up for my bad prediction of 2022 on the dogs of the Dow chart. So I'm here to get retribution and pick the winner this year.
Okay, let's see how you do. Let's start with looking at who the dogs are as a reminder to the viewer. The dogs of the Dow is simply looking at the companies in the Dow Jones Industrial Average and getting the 10 highest yielding stocks as of the close of 2022. And if we do that, and someone did, and we took that information, we're looking at Verizon, Dow, the company, Intel, Walgreens, 3M, IBM, Amgen, Cisco, Chevron, and JP Morgan Chase. As the winner of last year's Dogs of the Dow competition, I will allow my co-host, Brett Horowitz, to go first.
Okay, I'm going to go with Cisco this year, the technology company, not the food company. And the reason I'm choosing them is very simple. When the Fed stops raising interest rates and possibly even lowers them, I believe technology stocks will do very, very well in that environment. I'm going to go with Cisco. I know nothing else about them other than that fact.
So Brett, for my selection for 2023 Dog of the Dow, I'm going to go with a little company called Intel. 2 reasons. Number one, it was the one that was most down in 2022. It got chopped in half. So I like that. I like that a lot. Hopefully I'm not catching a falling knife.
I tried that strategy in 2022. It did not work.
But yeah, we'll see what happens in 23, buddy. New year, new me. And new CEO for Intel, kind of, not really. This CEO, Pat Gesslinger, joined in 2021. And you know, a fun fact about Pat, he's got 8 grandchildren.
Good for him.
And I think grandkids are great. I look forward to having them one day.
He spends enough time on the company and not on the grandchildren.
Let's see what happens, baby. Man of many talents, Pat. All right, I'm going Intel. Brett is going Cisco, not the food company. We shall see what happens a year from now.
And so this is the first of our predictions during this exciting prediction episode.
Precisely. Okay, good. Second prediction, which is something we've done before, is real quick on recession. We chose, at least for now, all we're going to do is a yes or no. We're not going to try to time it. We're just going to say, is it going to happen in 2023 or is it not going to happen in 2023? Maybe we'll get more nuance later on, but for now, we're just going to stick to our previous predictions, right? That's what we agreed to?
Yes. So give us the definition, the formal definition of a recession, not 2 negative quarters of GDP growth, but it's exactly what?
No, it's not. So good thing. All right. So the National Bureau of Economic Research, that's the body that says recession or not a recession. Their definition: it's a significant decline in economic activity that is spread across the economy and that lasts more than a few months. The committee's views that while each of the 3 criteria, depth, diffusion, and duration, have to be met individually, some criteria may particularly offset weaker conditions from one another. Here's the perfect example. February 2020, COVID. There was a peak in economic activity. However, they concluded that the drop in activity had been so great and so widely diffused throughout the economy that the downturn should be classified as a recession, even if it proves to be quite brief. So depth, diffusion, duration, and it's not just 2 consecutive quarters of negative GDP growth. There's other stuff got to be going on. Usually, though, what I will say is unemployment's got to be involved. If unemployment's not involved, I don't think they've ever called it. Maybe I'm wrong. Somebody tell me.
So I think we had said before, it was clear through many videos in the past, you have said a recession will occur in 2023. That seems to be the consensus view amongst everybody in the entire world, pretty much. Obviously, this definition here makes it a little bit more qualitative in some ways, right? It's not as clean cut as just you see a number, it is or it isn't. But I'm still going to say that I think somehow, and I hope that the Fed can squeak us by a soft landing, no recession 2023.
Okay, game on. Next, US versus international. Who outperforms in 2023?
It's obvious.
Wait, but it's obvious to me too.
Is it?
It is to me. Can we look? Let's go to the chart, Brett. So one chart. It's the best one. Purple means outside of the US outperforms. Gray means US outperforms. That gray bar is looking a little long in the tooth, BH. I have a feeling we're both going to be on the same side here, which makes me upset. So I'm almost considering a momentum shift. But what's your call?
It's got to be international.
Damn it. I want to say international too.
Not for the reason that international is cheaper than US from a PE ratio, because international is almost always cheaper than the US.
Yeah, it is.
Just for the simple fact that reversion to the mean in some cases, and the fact that their recovery started after ours. Our recovery started a lot faster from COVID. So I'm going to take them now as saying, okay, now the recovery is starting to be real. Energy is not as bad as we think it is in terms of the cold weather that's happening this winter. So I think they can parlay that into a nice year for 2023.
Yeah, I don't disagree. I want to take US so bad just to be on the other side, but it's all good. Why would I say US though? Just because of momentum. All right. Prediction number 4.
Treasury rates.
Okay. We agreed 10-year, right? There's plenty of them, but let's just go 10-year because that's what everybody cares about. The chart I brought up here it shows 2 rates, right? We're only going to kind of try to predict, so to speak, the 10-year. I gave you the 2-year also just to frame it. We're still inverted, so that's always important to know. What do you got, Brett, for end of year on the 10-year?
Well, I think there's 2 things. I think as I look at this chart here, we talked about in the past, the magnitude of the increase was so dramatic. That's why last year was such a bad year in the markets. I don't think anyone could have predicted over the last, 3 or 4 months that you'd see a big decline in interest rates, even as the Fed keeps raising rates. So, to try to predict where the 10-year is going to end up is going to be awfully tough. But if I had to make a guess, I'm going to go 3 3/4.
Oh my God, I literally have the same thing. That's so annoying.
Oh no.
Okay.
I'll take the over then.
Yeah, so that's what we have to do. Exactly. So the line is 3 1/4.
3 3/4.
Oh, you said 3/4.
Yes.
Oh, never mind.
Oh, you're saying 3 1/4.
Yes. Perfect. You're saying 3 3/4.
And so you believe that the bond market will continue to think that the Fed will lower rates, which is why the rates have come down the last few months.
I'm just being supportive of my recession call in 2023, BH. That's all. Ha ha. Consistency is beautiful.
And I believe that Mr. Powell will continue to come out with hawkish comments over 2023, and that the bond market, even though it wants rates to get lower and thinks rates will get lower by the end of the year, rates will not get lower.
I don't disagree with you, and I could very, very well see the 10-year hovering at 3.5 to 4 through October of this year, and then I get my way, just like I did with the dogs last year in the last couple months of the year.
Either way, 3 1/4 to 3 3/4 means not much movement from where we are today, which is pretty sort of standard rates, as you would call it. Not so bad, not so high, not so low, but sort of a Goldilocks event where you get some decent return and you don't have to worry about these giant losses in bonds anymore.
Yeah, exactly. That's a big story. Bonds were a bear to own last year, pun intended. So what does that mean? Going forward, at least you got something to rely on. All right.
Okay. Next up, Bitcoin.
All right, very exciting. This is your favorite. I think I twisted your hand to include this on here. Who the hell knows? But I got to
You
figure.
own
What do you
Bitcoin,
think?
Marcos?
Do I own Bitcoin?
Yes.
You know I own Bitcoin.
Okay.
Yeah.
So you've been tracking this probably closer than I have, but
No, not necessarily. I've always been so bad at tracking it. I threw a little money at it just to get me more engaged. Unfortunately, it wasn't enough to keep me super engaged. First world problems. Also important to note, I had coins at two places, Coinbase and BlockFi. I moved everything from Coinbase to BlockFi. BlockFi is now going through bankruptcy. This has been a pretty interesting experience as I get all the updates and see all the court proceedings and everything. So anyways, I'll give you my Bitcoin price target right now. It's so silly to say price target. I'm going to say 40,000 for Bitcoin by the end of the year. I'm saying the pressure off of rates will let it fly through the end of the year. 40,000. Nice round number.
the fact that it stayed up where it's been, at 17,000 or so and change after FTX, after all this stuff that's happened during the course of 2022, I'm shocked at where it is. So I would not be surprised to see 40,000 because if the market does well, I expect Bitcoin to do well. I still think this thing is a loser's game. So I would love to see far less than that, but I will take well under 40,000. I'm going to take 20,000.
20. So under. Okay, 20,000. Right, just under where we are. Okay, got it. 20. That's a big difference, buddy.
Bitcoin done. On to inflation.
We're looking at CPI. We agreed. For now, we'll just make a little prediction for headline CPI on a year-over-year basis. So we're comparing December 2022 to December 2023, right? That figure in 2022 was 6.4. What do you think it will be in 2023?
Well, I'm going to give you what I hope it is and then what I think it's going to be.
Oh.
I would love to see it in the 2.5 range because the Fed has said that they're willing to see a little bit over 2% because for so many years it's below 2%. So now they said, well, 2 is the target. It's okay if it's a little bit higher, a little bit lower. We're just looking for an average of 2%. Where I think it's going to be is still over 3%. So I'm going to go with 3.2%.
Okay, perfect. I'm glad you went 3.2.
I think
I'm
it's
going to go.
sticky.
It is going to be sticky. It's hard to get down. I agree, but a 3.2 would be so nice compared to 6.4. I'm going to price this right you and just 3.4 because I had 3.5 in my head. So I'm going to go 3.4. We need to come up with some rules here because I kind of price it right at you there. Maybe we have to predict before we hear each other's. Yeah, I'm going 3.4. I'm thinking 3.2. I think it's going to be stickier, but I think the Fed is just going to very, very happily deal with inflation in the mid 3s. And I also want to just bring back a word from 2021, really, transitory. Had they just kept saying it.
But yeah, I mean, no one thought that the supply chain issues would last as long as they did. But now we've got competing issues, which is China's reopened. What does that do to inflation?
I get it. That's going to be commodity pressures. But I think the biggest thing that is the macro secular thing is, and that's upward pressure on inflation, is reshoring of supply chains and redundancy building and appreciating the fact that from what you read and hear, no one's going to want to rely on a trade partner like Russia anymore. Right. So they have egg on their face. We'll see what happens.
Well, the only other thing I'll add is that I had read recently that the net immigration numbers have hit a higher point in the last few months than they've hit in the last few years. So maybe that can help bring the inflation down a little bit. More people in the country, less jobs available, less wages increased. Maybe that helps to offset it somewhat. But moving on. We're now at asset classes. Yes. So
okay.
We have a chart here showing all the different asset classes: real estate investment trusts, large cap, small cap, emerging market, domestic, bonds. And we're going to, obviously there's no pattern here. If anyone can see the pattern, please call us up because that'd be really helpful. But what do you think is going to perform the best in 2023 and why?
Okay. 2023. I wish I had this going back to the 1970s. and I would just pick what happened in the 1970s. I don't think it's going to be commodities. Man, and this is the first time I look at this, to be honest. I have two in the ring for me. And my two are going to be bonds and emerging market equity. And I'm going to go emerging market equity.
Okay.
Why? I'll give you the dollar, right? If we get the dollar coming down a ton, that's supposedly going to help EM out. And EM has just been a laggard the last 2 years. So did well 2020. We'll see what happens in 23. I'm taking EM equity.
Okay. Well, I'm going to hedge my non-recession bet and go with large cap companies. So the mega companies that are out there in the world, because if we do have recession, it's likely that you need a company that's got a lot of cash flow, you need a company that's stable, you need a company that's got a lot of revenue, you need a company that can get through that and is not a risky company like a small cap or an EM company.
All right, so that's US large cap.
US large cap.
S&P 500 for the win. Okay, reasonable.
I'm going with safe.
Brett, speaking of S&P 500, everyone's favorite prediction from all the big banks and talking heads in the world. Let's talk S&P 500 targets for year end.
So the S&P 500 ended the year at 3840.
Okay.
You've got your range here of only two companies predicting the S&P to fall for 2023, while the rest have some sort of increase to them. Now, I think any company that's going to be in the 3,800 to 3,900 range, I think those are the worst predictions because that's the safest thing there is in there, just to say no change.
What was the end in 22?
3840.
Okay.
So who do I think has the worst prediction? I would say Societe Generale, if I'm pronouncing that right, probably not, and Morgan Stanley.
No, you need your French accent for the SocGen.
But so I think the two that have basically no change or no dramatic change from where we ended the year, those are the worst predictions. I'd throw those out. Barclays, I also think has an awful prediction as well. Who do I think has the best? I'll go with somewhere in the range of JP Morgan Jefferies, 4,200. Not too hot, although I'd love to see Deutsche Bank be right. But I think there's still a lot of risks. I don't see us breaking out of this trend that we're in until at least the second half of the year. So I'm not sure how much room we can rally before then.
Okay. So I'm trying to cite something here. I'm not going to be able to pull it up in time. But here's the idea. I do think the market bottomed in October of last year. Whether we retest the lows, who the heck knows? But I do think we hit a bottom, and I do think this year's going to be positive. With inflation bottoming and rates, the pressure on the Fed to push rates up, I think we're going to get a great year in equity markets. Historically, when you get a drawdown of 25% and all the other headwinds flipping to become tailwinds, you get recoveries that are well over 20% in public markets. So I'm going to take, I think it's like I'll go 23% from where we ended the year higher. So I'm going to go 4,700 on the S&P.
Well, look, I mean, I think we have to be clear that even if these headwinds become tailwinds, there could be new headwinds out there, right? So we obviously
there always will be. I know there always will be.
We know that when everything is looking perfect out there, that's the time that I'd sell, because that's the time I'm nervous when everyone's just so optimistic that everything looks rosy. So I believe something's going to come out of left field and throw you a haymaker and bring it down from where you think it's going to be.
Did you go 4,200? Did you go 4,200?
4,200.
Got it.
Solid return.
Eternal optimist. All right, last one.
Unemployment. Okay.
Employment. Okay. As high as 14.7%, as low as 2.5% in like the 1960s or 50s. Where do you think we go?
We know, let's talk about what we know. We know the Fed would love this number to be a little bit higher because that'll put downward pressure on wages. We know that there's a lot of companies in the last few months that have been laying off workers, not millions of workers, thousands of workers. We also know there's 1.7 jobs available for every one person out there. So that's what we know. where it's going to end up, I think we'd be surprised if the employment rate kept going lower. Would you agree with that?
Surprised? Not really.
Lower
Just
than a
because
50-year
things
low?
happen. Yeah, just because weird things happen. I'm less and less surprised by things. That's all. That's all. I mean, yes, it'd be weird given that directionally speaking, how much lower can you go? But do you remember when the 10-year was at 3.5 and no one thought it could go lower? I know it's a completely different metric, but I'm just not surprised by things.
Are you going to go with a number below 3.5% to end 2023?
God, no.
Okay. So what's your number? How far high?
My number, and this is probably too aggressive, is 4.2.
I don't think that's too aggressive.
Yeah, I wanted to keep it in the threes, but I didn't. So I'm going 4.2 unemployment end of the year.
Okay. I'm gonna stick actually in the threes. I'll stick at 3.9.
3.9.
I just feel like so
Lying
many
me.
companies are retrenching. So many companies are keeping their workers, building their workers back up, afraid to let their workers go because of fear that when things turn around and demand comes back strong, that they're not going to have enough workers. Even if there is a recession, which I don't think is going to happen, I just think there's a lot of demand out there and not a lot of supply.
All right. 3.9 V4.2. We shall see who wins.
So we have 9 predictions. So one of us is going to win a majority.
Yes, we will. And I guess it almost guarantees that we'll still be talking to each other a year from now, right? We can't not see this through.
Yeah.
Excellent.
Let's see how we do.
Last important point. Predictions are fun, but they are not driving the way we're managing portfolios and the investment decisions that we're making. In our opinion, and Brett, please correct me if you don't agree, our investment decisions are planning driven, goal oriented, not market prognostication oriented.
Yeah.
So while this is fun.
Right. One of the most common questions we get is, what is your view on 2023? And I don't think we have a really great view on 2023, whether it's one way or another. We look much long-term than that. And so if 2023 is a horrible year, then the following years are fantastic or vice versa. It doesn't really change anything in our minds. Yeah. Over time, stocks do well, bonds do well, inflation is low. I mean, those are the things that you can just sort of count on, whether or not they end 2023 like that.
You can be short-term pessimistic, long-term optimistic, and be a great investor and probably beat 99% of everyone investing around you. There you go.
Okay.
2023 predictions episode. The first.
Good luck to you, Marcos. Let your streak continue or mine reverse itself.
Yeah. Good luck, BH.
Talk to you later.